Most Americans never learn why the system failed them overnight. One quiet collapse erased lifetimes of used savings and trust. Wall Street profit quietly outweighed American family security for years. What if the crash was engineered, not accidental? This one decision reshaped every American paycheck afterward. America's relationship with money began long before skyscraper banks. Early colonies struggled without stable currency or trusted credit. Fear of debt shaped young America's financial instincts. Private banks grew powerful as the nation expanded westward. Speculation became an American tradition, rewarded more than caution. Government oversight lagged behind financial innovation. Banks learned profit thrived when responsibility disappeared. Wall Street and Washington slowly began sharing interests. Ordinary Americans trusted banks with blind faith. Prosperity stories masked fragile financial foundations. Debt quietly replaced wages as the American dream engine. Homeownership symbolized success, regardless of true affordability. Banks sold dreams, not stability. Regulation weakened during economic booms. Risk felt invisible during rising prosperity. America's early colonies experimented with paper money and chaos. The Coinage Act tried standardizing value in a growing nation. Gold rushes fueled speculative manias and banking instability. Boom and bust cycles became deeply American experiences. The Federal Reserve emerged after devastating banking panics. It promised stability while protecting major financial interests. The Great Depression exposed unchecked banking greed. New regulations restrained banks and protected ordinary Americans. Post-war prosperity rebuilt trust in financial institutions. America dominated global finance through industrial power. The dollar became the world's primary reserve currency. Confidence grew as memory of collapse faded. Banks pushed boundaries as regulations slowly loosened. Profit replaced prudence once again. In 1971, America left the gold standard behind. Money became trust-based, flexible, and dangerously expandable. Wall Street leveraged debt into unprecedented wealth. Financial engineering replaced traditional banking principles. Mortgage lending transformed into profit factories. Risky loans were bundled and sold globally. Rating agencies blessed toxic assets for fees. Regulators trusted markets to self-correct. Housing prices rose faster than wages nationwide. Americans borrowed heavily, believing prices never fall. Banks ignored repayment ability entirely. Cracks formed beneath the booming housing market. Defaults slowly revealed massive hidden risk. Trust evaporated between world's largest banks. Liquidity vanished almost overnight. Lehman Brothers collapsed, confirming systemic failure. Taxpayers rescued banks deemed too big to fail. Wages stagnated while financial assets recovered quickly. Middle-class wealth vanished faster than it accumulated. Rent replaced ownership for millions of Americans. Inflation quietly punished savers and workers alike. The Federal Reserve flooded markets with cheap money. Banks consolidated power through crisis-driven bailouts. Student debt expanded as opportunity narrowed. Speculation returned, fueled by easy credit. Financial lessons remained largely unlearned. Families lost homes built through decades of work. Retirements disappeared as markets collapsed suddenly. Young Americans entered adulthood buried in debt. Trust in institutions permanently eroded. Economic anxiety became a constant companion. The middle class shrank despite economic recovery headlines. Wealth concentrated faster than ever before. History warned America, but prophets muted warnings. Final message: financial systems serve people only when people demand accountability.